Let's get to hot picks. Our guest focuses on the energy and infrastructure sector, and Cameco is on his radar. We're joined by Tyler Rosenlicht, Senior VP and Portfolio Manager in Global Listed Infrastructure at Cohen Steers. Tyler, thank you very much indeed for joining us. Start off with Cameco. Of course, they're fascinating, don't just make uranium, but they now have an interest in actually building or servicing reactors.
Yeah, that's right. So thanks for having me this morning. I mean, we're really excited about the nuclear build out globally going forward. You know, we've seen the nuclear industry really shut down over the last 20 years, and we think that's changing in a big way. We think it's going to be about extending existing reactors. It's going to be about turning back on reactors that we've recently turned off. And then it's going to be about brownfield and even greenfield nuclear development going forward. You know, Cameco is a really good way to participate in some of these themes. You know, clearly they directly benefit from rising uranium prices, which we would expect to happen over time. But also, as you see more CapEx go into the industry, their co-ownership in Westinghouse, we think, is going to be uniquely advantaged going forward, again, as this energy addition theme continues to play out over time.
It is interesting. I suppose one problem, it's not unique to Cameco, is just the huge cost overruns we have seen on nuclear reactors, at least outside China.
Yeah, that's right. I mean, I think part of our view is going to be the regulatory burdens and the sort of regulatory regime will improve over time. A lot of those cost overruns were a function of really challenging regulatory environments to work through. So we think as the world recognizes this desire for baseload predictable power that's also clean, and nuclear being the one resource that can really fit the bill there, regulatory environment will be a little bit more accommodative, and hopefully that will make the eventual sort of cost dynamics a lot more predictable going forward.
Yeah, it's interesting. I see that Cameco is down today. I haven't seen any particularly negative news. Jeffrey says the uranium market goes soft over the summer months, just seasonally. I guess the utilities aren't there buying.
Yeah, I mean, part of it is this is a long-term secular theme. We think in the shorter run, you know, things like policy changes will obviously affect near-term performance. So there was a lot of news overnight the last few days about the One Big Beautiful Bill and what that might do for renewables. So in the short run, you might see a lot of these stocks trade more on the sentiment around what will happen in DC and other regulatory regimes. But the reality is, like I said, we're in an energy addition world. The world needs more energy, ideally clean energy. Nuclear, we think, is a really good way to solve those problems, and we think that it'll continue to do very well over time. That's
an interesting story here. The Financial Times, I'm not sure if you know, Brookfield is one of our big infrastructure investors here in Canada. As you know, they're huge in renewables. They apparently, according to the Financial Times, want to take a 20% stake in the UK's Sizewell C nuclear project, but Brookfield wouldn't comment. But interesting, big money going into nuclear.
I mean, these are big projects, lots of CapEx, lots of opportunities. I would expect lots of major institutional investors like them to be trying to find opportunities to deploy capital. And like I said, what we see as a really key solution, it's about making sure that you have predictable power that's clean. And I think as the regulatory regime gets more positive, you know, I would not be surprised to see major announcements and major transactions going forward.
And Brookfield, of course, also a part ownership of Westinghouse with Cameco.
That's right.
Small world. And this is an interesting name. I don't remember ever talking about this one. International Container Terminal Services. What is the attraction there? What do they do?
Yeah, so they're a port owner and operator. Obviously, people have been very concerned around tariffs and what that might do to global trade over the short term and the longer term. I'd say as you look past the sort of tariff noise, we do think that global trade will continue to be robust, and that's going to be a really good environment for port owners and operators. Uniquely about them, they focus on what we call origin and destination ports. So it's not ports where you transship goods, it's ports where the goods are produced or where they're consumed. And we think that that's a lot more defendable market position than other port operators around the world. You know, these ports have really good pricing power. They've been exerting it over time. As their costs go up, they're able to raise their prices to customers. For us as infrastructure investors, that's a key driver of our underwriting. You know, how good is the pricing power of the underlying business? And we think ICT, you know, really has a unique asset base to pursue that.
They're Philippines listed. Are they a Pan-Asian player?
Yeah, they have assets around the world, but definitely key assets in the ASEAN region, which we do think is starting to see a lot better economic prospects than we've had over the course of the last few years. So one of our views is, the U.S. people are getting more concerned about. They're looking for global infrastructure assets, and ICT's global footprint with ASEAN focus, we think, is really valuable in this sort of environment.